This program provides education, not advice. Sponsors pay a fee for endorsements and interviews. See the truthayf.com disclosure page for details.
This is where technology, innovation, and personal finance come together.
This is the truth about your future with Rick Edelman. Brought to you by Global X ETFs, dedicated to providing investors with unexplored intelligent solutions. And by Presidio, offering a digital vault where you can collect, protect, and share all your important people, places, things, and documents with all the key people in your life. Start for free at Presidio.com.
It's Monday, October 16th. Everyone has been asking why BlackRock, the world's largest money manager, decided to file an application with the SEC to launch a spot Bitcoin ETF. After all, as the world's largest money manager, BlackRock owns iShares. They've got nearly 600 iShares ETFs on the market, but BlackRock has never tried to offer a crypto ETF. Why now? Well, for one thing, BlackRock CEO Larry Fink says Bitcoin could revolutionize the financial system. He also says Bitcoin is a better hedge against inflation than gold. One big question that everybody asks is not just whether you ought to invest in Bitcoin, but how much of your money you ought to put into it. I've always said 1% of your portfolio. Yale says 3.1%. The CFA Institute says less than 5%. But here's something you probably never heard of. An internal paper by BlackRock economists says that your clients should be investing 85% of their portfolio into Bitcoin. Yeah, you heard me right. 85%. The other 15% should be split 60-40 to stocks and bonds. This paper has not been released to the public. You may have come upon it because it's available only to financial advisors like you. So I'm not going to give you the link to the paper here, but it is a powerful examination of crypto asset allocation. It says in part, quote, Bitcoin returns exhibit pronounced positive skewness, unquote. The authors of the paper at BlackRock examined Bitcoin returns from July 2010 through 2021. The paper is highly academic in its tone, and I know you hate to read that stuff as much as I do. Here's a short excerpt for you. Denote R equals open paren RBTC REQ RBD close paren as the vector of continuously compounded returns on BTC equities and bonds respectively. We assume that RBTC follows the mixture of normals process given in equation 1 with the parameters reported in exhibit 3. So that we focus only on the skew induced by BTC, we assume that continuously compounded returns of equities and bonds REQ and RBD respectively are log normal with the full sample movements in exit 1. In each regime of Bliss or normal returns, we set the correlation structure of BTC, equity, and bond returns to the empirical estimates listed in Exhibit 1. Okay, back to normal conversation. You really want to read a 10-page paper like that? Well, go right ahead. I read it, and I had to go take a break. Bottom line, paper says the optimal allocation to Bitcoin is 84.9%. Maybe, just maybe, the world's largest money manager knows something you don't know, and maybe, just maybe, this is why they want to release a Bitcoin ETF, to enable you to capitalize on this unprecedented investment opportunity on behalf of your clients. Crypto is now available to pretty much every major fund company. There are ETFs, private placements, SMAs, IRAs, proxy stocks, closed-end funds. However you run money, there's a product platform that matches your practice management, so you can easily add crypto to your client portfolios without having to build a new tech stack, without having to retrain your staff, without having to reculturalize your clients. It's an easy way to invest in crypto today. It's as easy as investing in gold or emerging markets funds. Talk to us at DAC-FP to learn how. My sister company, the Digital Assets Council of Financial Professionals. We can show your compliance, risk, and legal team that they don't need to be afraid of digital assets. We can show your investment committee the array of choices that are now available. And we can show your planning team how to provide the training to you and your fellow advisors so you can responsibly and accurately talk to your clients. Above all, we can show you how to get your CBDA designation, the Certified in Blockchain and Digital Assets, listed by FINRA as a professional designation. Just contact us at DAC-FP. The link is in the show notes. And with these new ETFs now available and more soon coming online, you need to be ready for the sake of your clients and your own practice management. And no, I don't really think anyone is suggesting that you put 85% of your money into Bitcoin. Not even BlackRock is saying that. But to do 0%? That is 100% wrong. You know, bonds are back. That's thanks to the highest interest rates in 20 years, but are you helping your clients make the most of today's opportunities from today's bond yields? Join me October 24th, it's a Tuesday, 1 p.m. Eastern, for a special webinar that'll show you how to capture yields in today's high-rate environment with bond ETFs. I'll be joined by David Braun, the managing director at PIMCO, and we'll tell you the best fixed income opportunities that are available to your clients right now. You'll also get crucial insights into the economic outlook that you can use in your client conversations, and you'll get 1 CE credit to boot. You can register for the webinar about today's bond yields for free. The webinar's Tuesday, October 24th, 1 p.m. Eastern. The link to register is in today's show notes.
The Truth About Your Future with Rick Edelman is sponsored by Charles Schwab. Schwab believes every investor deserves to work with a firm they can count on. That's why Schwab has 400 local branches with financial consultants ready to serve you, along with professional answers and 24/7 live help. And it's backed by Schwab's Satisfaction Guarantee. If you are not completely satisfied, Schwab will reimburse eligible fees related to your concern. Visit schwab.com/satisfaction to learn what's included and how it works. Charles Schwab. Own your tomorrow.
Landmark infrastructure legislation was passed in the last Congress. Now comes the work of getting it built. The Global X U.S. Infrastructure Development ETF, ticker PAVE, invests in dozens of companies helping shape the future of American infrastructure. Investing involves risk, including possible loss of principal. Investments in infrastructure-related companies have greater exposure to the potential adverse economic, regulatory, political, and other changes affecting such entities. Before investing, carefully consider the fund's objectives, risks, charges, expenses, and more in the full or summary prospectus at globalxetfs.com. Read carefully. Distributed by SEI Investments Distribution Company.
Demystifying digital assets, putting crypto in context, and getting you ready for what's next.
This is The Truth About Your Future with Rick Edelman.